All right. Good morning or good afternoon, I guess. Welcome back here to Trader Minute. Great to have you aboard. Market's been open now, has an hour left to go here today. And we have had the Fed beige book come on out. We saw the early morning sell off in the market, come into play. And you kind of see what's happened since. It's kind of just been this little dribble to lower lows with some lower high bounces coming in. We do see the market bouncing, a little bit, here in over the last, over the last 10, 15 minutes. The reaction to the beige book here has been, has been one where initially we've seen some sell-off, and then, that's been kind of bought up. But, this is a 6-point drop in pop. That's not exactly anything, really game-changing. There with it. So anyway, that's the market here today. Market vibe down to 2 here today. 2 points away from a bearish signal, but it's not there, right? And it's not something to anticipate with it. The market vibe isn't something where you go, well, it's going in this direction, so it's going to keep on going. We've seen it go from 5 to 3 to 4 to 2 to 5 to 4, just bounce back and forth here over the last a little while. So anyway, that's what we're looking at. We are seeing small caps getting hammered today. In fact, that's why the market vibe is down here today, because of small caps and the big drop in small caps that's being driven by healthcare and the IBB. This concern over drug pricing, that we've heard, and how that is going to affect these drug makers going forward for the rest of the year. As that fear is circulating throughout the market. You look at the pharmaceutical holders here today, the PPH. If you look at the XLV on the year, here's the XLV on the year. It's, this is one of the few indexes that is in danger of being red for the year. And there's not a lot of that out there. It's very, very rare out there to see. So we're seeing that come in here today. The Fed beige book about the same as what we've seen. This idea that, yes, growth is slowing, but it's not everywhere. We're seeing things picking up a little bit here and there, but not a whole lot. It's really not a lot for the market to give the bulls more of an argument or the bears more of an argument. So I kind of look at it as a non-event from that standpoint. But price action obviously will be king here. All right, so the challenge, right? We're in cash. There haven't been many entry triggers here. There were no entry triggers yesterday. No entry trigger here this morning. This afternoon, we're getting an entry trigger. And it's an interesting one, and it's one that's going to give me, I'm sure, a few questions will come in about it. And it is a bearish signal on Netflix here today. And we saw a bearish signal come in on Netflix earlier this week, and that got whipsawed with the analyst upgrade, right? We saw the analyst come out yesterday and say, hey, everything's fine, it chillax, essentially. So whipsawed. We weren't able to trade it for the challenge because the option pricing where it was, right? It was too expensive to get in with the cash levels that we have. But we've now had earnings. So what's happened to option pricing? Well, it's changed. It's dropped significantly here, and so let's go see if we're able to trade this here with Netflix. All right, and I'm just going to come in. We'll look at the option pricing. Here we are, 14 to 20 days out. We're looking at the put side, and you can see they're going for about $9, right? They're going for about $8.80 to $9. The first strike or the at the money strike price here. So it's in that range where we can get it. So going to pick up a contract here. Going to pick it up there for $8.90 is what the contract was. So let's go get in here. We're just going to do one contract here at $8.90 and one. So what does this mean? This means we can't scale out, right? This is something I'll talk about tomorrow, but it's not going to be something we can scale out of when that time comes. But here we are, 4:17 p.m. and we're in the 352 and a half. So the 3rd of May. 352.50 put, right? And the stock price right here is 352.52, right? So we're in there at 352.52, and current price 890. And what is the average true range on Netflix, right? We need the average true range to be able to then, calculate everything. So the average true range on Netflix right now is $10.54. So 10.54, and that would give us a stock exit level. Well, let's see if we can do it this way. Of 363.06, right? And that would give us a stock profit level here of 331.44. Okay, and that'll be interesting to go and take a look at when it gets there. We'll talk about how that's going to all work out there, and then let's see. There's a trade exit date, so 3 days from today is 4:20, and that would be p.m. Right, so essentially what, Friday? Do I have that correct here? No, 4:20 is Saturday, so this would be 4:22 p.m. Right, 4:22 p.m. and then cash in. There we are, and there we go. Okay, and open. I'll populate this down into down into test 2. It'll be the exact same there in test 2. In test 3 here, this is going to be, let's take a look here. Looks like price changed just a little bit, but the 350s, you'll notice they're going for 11.30. The at the monies. These are a little too expensive. For $800 into the trade, we could go out of the money. Right, we could come down here and go out of the money and do that, but I do not want to be 2 strikes out of the money. So we're too expensive to make this trade in the longer-term test basket. So we're not going to make the trade there. So here we go. We're just gonna copy and paste this right here, and there we go. All right, so in here on Netflix, on the puts here on Netflix, and running here with those. Okay, that easy, that simple, but wham, bam, decision made. Now, this is not something that, if things, if you don't have a little bit of, automation here, right, or easy decision making, may be the better word here. Is Netflix something you're going to get into? No. For me, it's not, right? For me, it's something where I look and I go, okay, yeah, I see the setup. I like it, but, man, we just had earnings. Does it get upgraded tomorrow? Oh, man. Okay, well, what if it goes against? Where's a good stop level? Man, these options, right? A lot of questions can come in. Right? The nice thing about the algorithm, doesn't take any of that into account. Had I made the trade on earlier this week and got whipsawed out, is it easy to get back in? No, it's not. But one of the things you'll find with this algorithm and this method here, there will be plenty of whipsaws. They will exist. We talked about it with gold. We talked about it with Nike, even though it didn't trigger to the upside it just missed a trigger to the upside, but had that trigger to the upside, boom, it'd still be off and rolling. Bollinger Bands be damned, moving average be damned, all of that would still be rolling. Market environment, who cares, right? And we're gonna see this happen. We see it happening now with Netflix. Gold, GOLD, didn't quite trigger to the downside yesterday after kind of giving a call signal and then pulling on back. Did not give a reversal signal there. So we've seen that kind of with both Nike and gold, but Netflix is creating that here this week. Okay, it's also not going to be uncommon to see the same stocks in focus on a week or a 2-week period, because of the fact that in this watch list there are just stocks that are nowhere close to triggering. Right? They're just not even close. Something like an Apple, it's just really not close to triggering any brand new bull signal or any brand new bear signal. It's still in this higher high, higher low position. So to trigger a bearish position would be very tough, because this algorithm generally, not always, but needs a lower high and a lower low to come in. Right? And we're not seeing any of that here with Apple. Is it going to create a new buy signal? Well, it's not going to create a new buy signal at this kind of level of overbought. And so it's not going to give us any sort of signal this week, probably not next week, and probably not the week after. And what we'll see in the watch list, we'll see, stock cycle where, yes, they will be in the sweet spot for entries and whatnot, while others, they're just not even close. And it'll be a while, right? And Apple's kind of in that category. It'll be a while. It's just really not even close there to it. So, we'll see this kind of emerge where over a 1 to 2 week period, there'll be 4 or 5 stocks in focus. And then the next 2 to 3 week period, there'll be a different 4 to 5 stocks in focus. And that's generally kind of how the algorithm has behaved here in the past. Remember, the algorithm isn't designed to look at Apple and to go, well, let's assess it where it is right now here today. Is this stock going to go up or down? It's not designed for that. It's designed to say, hey, you know what? This stock is doing something that historically, when it's done it, there's a high probability that it moves to trend. And that's what it's looking for, and it's not looking for tops and bottoms and those types of things. It will be interesting, and in fact, it's ongoing in some of the testing. I have Trend Rider, testing with some of the challenge format. I mentioned it before. But Trend Rider signals testing with it. It's still kind of early. I've done a few tests with it already. It's a very high risk, high reward. It doesn't really apply to the challenge as well as I was hoping, because 1 to 2 losses in a row, boom, it's done. Because when they go against, those options go to 0 almost every time. So it doesn't quite give any survivability, which is one of the key elements that the challenge needs, is some survivability when there are some whipsaws or when there are 2 to 3 to 4 triggers in a row that don't work. And we'll kind of see how that plays out, but we can always apply different algorithms to it as long as they do have that survivability. But those will be in the future. Going to continue to run with this one here for now. So in Netflix, again, not in all baskets, just in the 2 shorter term baskets here, and we'll run with those here into the close. All right. Different subject. Market down today, and it's one where I need to make sure I word this correctly. It's one where, look, I've been bearish on the market since back here in February, right? I've been dead wrong. Market has just continued to grind higher. I understand why. I understand what's driving it. I don't look and go, well, the market's wrong. The market, no, the price actions, it's always right? I've been dead wrong. I got a couple market vibe bear signals that I reacted to. Got stung a little bit there with those. But when this happens, right? When this happens, and this isn't the first time, it won't be the last time, and every trader goes through it, every trader experiences it. But different traders get a different mentality with it. Some get this mentality of, well, I haven't been in on the upside yet, so why bother? I'll just wait. Is it a rational thought? No, it's not. When you really break it on down, it's not a rational thought. You're basically saying, well, I've been wrong this long, so instead of trying to be right now, I'll wait till I feel like I've been right for a little bit. It's not very rational, but it's very understandable, right? Very understandable. And we all kind of go through it, right? Some traders react and they go, well, I've been wrong. So you know what? I'm eventually going to be right, so I'm going to double up. Those traders, they get in trouble real fast, right? Imagine if for the challenge I said, well, you know what? I've been wrong. So you know what? Let me go right now. I'm going to put another $3,000 in, and boom, we're going to go all to the downside. I'm going to be right, or else, right? Or even worse, I go outside the challenge and I double up, and I say, well, you know what? Since I've been wrong, with this 3,000, I'm going to now throw 6,000 into the downside and go. A lot of traders will do that, and they get themselves in trouble very, very quickly. The past influences the present and the future. That's just the way the market is. The way that I trade is generally when I'm hot, I press the gas, and when I'm not, I slow down. You've seen that with challenges over the years. And that's the way I am in my personal trading. But one of the things that comes when somebody's sitting and going, well, I'm waiting for a chance to get in. I'm waiting for an opportunity to get in. They can kind of microanalyze. Say, well, you know what? We finally had a pullback today. All right, it's time for me to go and get in big on the downside, and let's just go. That's kind of a dangerous mentality, and it's something where they micro look at it and go, well, we had a little one, so all right, here comes the big one, and they don't want to miss, and that's the overall driver. They don't want to miss the next down leg. Because you know what? Miss the up leg. If I miss the down leg too, oh my goodness. That's just going to be too painful to deal with. It's common. It's not unusual. It's not, it's not something that makes a trader, strange or weird or anything like that. It's very common, and you see it all the time. And there's not one right way to react to it. Right? There's not one right way to react to it. Me, myself, I go out every week. I've found a reason to buy some weekly puts on the market, right? I'm only putting what I'm willing to risk. It's a small amount. It's just to scratch the itch. It's not something that's going to make me a big amount. It's not going to lose me a big amount. It is just something to scratch that itch so I don't do something stupid, right? But one of the things that we need to understand is what would be a sign that, hey, you know what? Yeah, you've been bearish. All right, now's the time so you don't miss it, right? Now's the time. Don't miss it. Well, that's what the market vibe is intended for. Right? That's what I use, right? But generally within the market vibe, we can look at one or two factors and say, hey, you know what? These factors are in play. Because if there's a pullback, the chances of that pullback coming to the 200-day moving average are very, very large. The probability is very high that that's going to be the pullback level. Is it going to pull back off of 300, 320, 340? Who knows? Right? We can speculate. We can guess. We can throw Fibonacci extensions and sequences and all the other technical tools on there. But all of those tools have kind of, they've had areas where we were supposed to have pullbacks, and market just continued to go on higher. First thing, to get a pullback, there has to be a breach of the 7-day moving average. It's not going to happen with the market above the 7. So if the market's trading above the 7, you know what? It has to be something really dramatic to say, all right, you know what, there's a lot more downside to come. By really dramatic, take a look right back here in end of November, right? That's pretty dramatic, pretty abnormal. There has to be something pretty dramatic, just a little little pullback, 6 points. That's not all that dramatic. But the market needs to trade below the 7-day moving average. In fact, on many major pullbacks, it actually gaps below the 7-day moving average. Not always, but we see a gap below it. We also need to see some negative divergence, right? Some negative divergence. And we see some of that, right? MACD has some negative divergence on it. Market's hitting a new high, but the MACD indicator isn't. We also need to see a little overbought. Here's the MFI, right? Here's the MFI. The MFI is above 80, and the MFI hit 92 here today. In fact, if we go back and we look at the MFI over the last 5 years in the market, has it hit 92 before? Well, it has. It hit it at the beginning of 2018. It hit it in October of 2017. What happened in these time periods, right? What happened? Well, we'll scroll the chart up. Here we are here we are the last time the MFI was up here. Market was in a runaway, had a sharp downturn. The time before, market just kept on going, right? So we have that overbought condition. But what's the difference between the market turning around and the market just keep on going? Well, generally it's the number of stocks that pull back. Right. One of the best indicators of whether the market is ready to really have a sizable pullback will come down to the number of stocks trading above the 7-day moving average. And if we see this number hit 100, push down to 100, the sell-off is on. The sell-off is on. As long as it's above 100, it's going to be still a little more ambiguous. It hits 100, sell-off is on. We've dipped down. We've seen it hit 140 and 180 and go into those levels. But even today, on today's dip, it's still 274. Over half the market's trading above its 7-day moving average. You might be right by calling a top today and saying, hey, the market's never going higher. You might be right. But to put the odds in your favor of, hey, you know what? When does the market pull back off this negative divergence, overbought condition? Well, generally the spring and the catalyst is, hey, we start to see most of the S&P stocks start to trade below the 7-day moving average. We're not seeing that today. So yes, we could be right. Yes, the top could be in, but we aren't seeing that factor that we always see on the heavy pullbacks that come into the market. And so my advice would be, hey, before getting big, right? Yeah, fine, go scratch and go buy some downside puts on the market or something like that. But before, really loading up and saying, what, I have a position that I'm really confident in short term, wait for that number of stocks trading below the 7-day moving average to, or trading above the 7-day moving average to be 100 or less. Thanks for hopping on. Have yourselves a fantastic evening. We'll be back here with you tomorrow. I'll be on video at 10:30 in the morning. Okay. I do have a meeting in the morning, so I won't be able to be on before the market opens. But at 10:30 a.m. we'll jump on. We'll continue with the challenge. We'll go and we'll look at the earners and how those have come in and played out. And then we'll look at the PMI data. Tonight we're going to get PMI data out of Europe. And then, 15 minutes after the market opens tomorrow, we will get PMI data here in the U.S. And it's flash data. It's the first look at April data. And, we'll most likely garner a reaction from the market itself. Again, thanks for hopping on. Have yourself a great one, and we'll talk to you then. Take care.